What is going on, guys? Good afternoon. It's your favorite mortgage lender, Abdel Kwame, Got Mortgages. Happy Monday. We are going to go over a lot of different information. We've got inflation that's showing signs that it's starting to come steady. We've got signs that, in regards to home sales, starting to show momentum, and we're going to jump right into it. So, again, Fed's key inflation measure that we know is going to be based off of what? It's going to be based off of CPI, PPI, and then the PCE report, which we get. We're going to dive right into it again. We got updates on PCE, Personal Consumption Expenditure Report, for the month of August. Remember, it's always lagged by a minimum of a month. And we actually saw inflation slightly tick up 2.9, remain more or less pretty steady on the core at 2.9. Again, the PCE rose 0.3%, really month over month, nudging the annual rate from 2.6 to 2.7. Not terrible, right? The Fed, of course, is caught between two things, like we always say. Inflation is showing signs above the target, and we're showing growing signs of economic softening, right? We have that push and that pull going back and forth since we've cut rates, right, about less than 2 weeks ago. The Fed is obviously seeing a little bit of downside risk to employment, a little bit of few labor reports that we're starting to see, of course, impact a little later on when we get the September jobs report that's going to be due on October 3rd. We'll see how that simultaneously impacts some of the things. Let's talk about initial jobless claims. Initial jobless claims just dropped to 218,000, right? Another month of drops, but still seeing continuing jobless claims edge just over 1.9 million, right? With 1.926, once again, clearly showing that people, once they're getting let go, are having a hard time finding employment thereafter. Existing home sales, once again, dropping as well. You can kind of see here it's being pretty steady, right? Between 4.1 to 4 million on the sales pace, up 2% year over year. We're still in a super competitive market, right? We're only at a 4.6 month supply. Remember, that's on a national level. Let's be honest, there are some markets, such as some areas in Florida, Texas, California, that of course are slightly being impacted. On the other side, we're here on the East Coast. It's still super hot. 31 days on the market from 21 days. Still 20% of homes are being sold above list, with 28% of them being first time home buyers. Again, clearly showing signs of strength. On the new home sale side, take a look at that jump. 800,000 signed contracts, up 20% month over month and 15% year over year. Again, clearly showing signs, again, fastest pace since 2022. Sales continue to remain, again, strong in the coming months. We're seeing, obviously, supply of move-in ready homes remain tight and clearly showing there. Then we get updates on GDP, gross domestic product. Once again, showing in 2025, U.S. economy grew by 3.8%. Very strong. Of course, we're keeping an eye on tariffs and the potential push on that. We haven't really seen any of those signs. As we head into next month, we're going to see pending home sales come out on Monday, home appreciation come out on Tuesday, and then obviously the labor market, right? We get JOLTS reports, ADP report. There's going to be pending. Can the government potentially shut down? Because that could obviously impact some changes when we get some updates on the BLS report, Bureau of Labor Statistics. Of course, I'll keep you guys updated. Any questions that you guys have, please feel free to visit our website, gotmortgages.com. Thanks again, guys, and I'll catch you guys next time.